Good morning or good evening, everyone, depending on where you are, and welcome to today's webinar. Today, we are going to talk about buying, living, relocating, and investing in sunny and hot, at the moment, Dubai. So thank you all for taking the time to join us. Over the next 45 minutes to an hour, we will be covering the key property, finance, and wealth considerations for anyone thinking about buying in Dubai, relocating there, or investing in the market. Whether you're already making plans or simply exploring your options, our aim is to give you practical, honest guidance you can act on. We brought together specialists covering the Dubai property market today, as well as finance and lending, currency and tax and wealth planning, so you can have access to all the expert insights that you need. So let me introduce you to today's panel. Today we have Matthew Law, who is a property expert at Fine & Country and Fine & Country Dubai Invest in particular. Chris Lloyd, who is a finance expert at NS Global. Steve Eakins, who is a currency expert at Lumon. Simon Pitkin, who is who does wealth planning at Oxton Wealth. And I'm your host for today, Emily Despois, and I'm the CMO of Fine & Country. So throughout today's session, you can submit questions using the Q&A function, and we'll answer as many questions as possible. We have received a lot of questions, so if we don't manage to get to yours, we will follow up after the session. One of our experts will get in touch with you and answer the questions that we haven't managed to answer today. A couple of housekeeping points before we start. Today's webinar is being recorded, and a copy will be sent to everyone who registered, so no need to take notes. You can just enjoy and listen. And finally, a brief disclaimer. Today's discussion is for general information purposes only and does not constitute financial, tax, legal, or immigration advice. Everyone's circumstances are different, so we'd always encourage you to seek independent professional advice before making any decision. So without further ado, let's just start and go through all the many questions that we received from you. So if I may, we'll start with the Dubai market itself first and what buyers should know right now. So let's go to Matt first with the first question, which is, what does the Dubai property market look like today for UK and international buyers?
Hi, everybody. So Dubai remains still one of the world's most internationally accessible property markets for UK and overseas buyers, and they can acquire freehold property in certain designated areas. I'm sure probably a lot of you have actually already looked at areas over in Dubai. There are many, and there are new areas coming up as well. As I said, there's a broad choice from income producing apartments to the ultra prime villas. And the market remains highly liquid compared with many international destinations at the moment. However, we are seeing a healthier degree of caution. The market is moving away from indiscriminate buying and towards the quality side. Buyers are asking more questions about developer track record than actual rental demand, service charges, and the payment plans and future supply. That is positive for serious long-term investors. I mean, go to the beginning of 2026, it began strong. And obviously with new investors, rising foreign investment and continued luxury demand, nevertheless, the regional conflict, which I'm sure everybody's wanting to find out a little bit about how that's affected, the market has produced a noticeable slowdown during March and the second quarter, but it does remain strong. I mean, Dubai is not a single rising market. Just completed homes, there's off-plan developments, apartments, villas, ultra prime. And I will say that I've just actually come back myself, and you don't hear anything about it over there at all. It really is a really good market at the moment. And I can see by the end of the year, it's going to get even stronger as well.
Thank you, Matt. Just be careful when you move. I think you're moving your mic as well, so sometimes there's a bit of we can't hear you very well. But I think everybody got this. So market still moving and a strong market in Dubai. So actually going back to what you were talking about and the tension in the Middle East, I think a lot of people who are listening are curious about whether Dubai is still a safe haven for international investment.
Maybe I'll jump in on that one actually.
Yeah, sure.
I've been the longest, so I've been in the UAE 16 years. So I moved over in the financial crash and thought, what the hell have I done with myself at that point? But I've been through that. I've been through COVID. I've been through various ups and downs in the UAE. One thing I can say about here and people that are considering moving to the UAE, it's super resilient. It does very well out of wars and disasters. And we saw that through Russia-Ukraine situation, everything, and it's not putting people off. And in fact, the current political situation in the UK is still forcing people to go, I've had enough of that government, I'm still leaving. So yeah, still super strong market. And we've actually seen the population grow in the last couple of months as well. So we've now 4.5 million people in Dubai.
And so following from that, is it a sensible time to invest now in the UAE?
Yes, I'll go on that. Yeah, absolutely. I mean, give you an idea, just in the last couple of weeks, I've been over there myself and only flew back in this morning. There's been a lot of launches of new developments. There was one 2 weeks ago, and it sold out over 400, I think it's about 450 units. Properties sold out in 4 hours, and there's actually still now 5-1, 5 other buyers waiting for anything that actually comes back on the market if they don't go ahead with it. So, and there is so many developments as well coming to market over the next coming few months. I mean, the government are planning and putting everything in place towards the end of the year, and it's still incredible, and it's amazing to see actually with everything that's going on.
Absolutely incredible. And so actually a question, I'm going off script here, but we had an interesting conversation yesterday with someone who said, and not confirmed at all, so we don't know if it's a myth or not, whether the Dubai government was actually offering cash to people who are bringing foreigners into the country.
Totally true.
Yes. Oh,
So
sorry. Yeah, that's true.
Yeah, bring a friend basically, and we'll. I can't remember I think it was
3,000 dirhams. It's £600 per person.
Bring a friend, and we'll do that. And to add to the credibility of that, the Middle East airlines, so Etihad and Emirates, are also providing free travel and health insurance and evacuation insurance if needed as well. So kind of resilience of that. Just to kind of add to that as well, when the conflict kicked off in February, they gave the hotel accommodation free to anyone that was stuck here. The government said all hotels, let's do it, send us a bill. Anyone that couldn't get a flight when they were initially cancelled. But in reality, that was, I guess, 2 to 3 weeks of a bit of hairiness going on. It was a little bit hair raising for a period of time. But actually, once that kind of happened, and I guess to add some credibility, go off a little bit on that, we now have 6 layers of defence in the UAE. They just added in the Iron Dome and something else recently. So I think it's almost impenetrable now. Even though there is a little bit of volatility in the region still, we're seeing 0 in the UAE now.
Yeah, agreed.
So going into areas of developments in Dubai, which ones are seeing the strongest demand at the moment?
Sorry, Mel. So you said which developments are seeing the strongest demand?
Yeah. Areas.
Pardon?
Which areas in Dubai would see the strongest demand at the moment?
Dependent upon what they are what the investors looking for. I mean, Palm Jumeirah it's risen 19% annually. It's gone up 19% this year. Emirates Hills, that's still very into a lot of demand. DIFC, That's got a very high demand, because obviously the ISC is the business area around by Business Bay, and you've got sort of income focused buyers slightly different. You've got Dubai Investment Park, you've got Sports City. I used to live in Sports City myself. The development there is coming up. There's a lot being built around there. You've got a golf course near there as well, Victory Heights, and the Silicon Oasis. JVC has been really, really popular recently as well. And there's Discovery Gardens, and there's a lot of building going on behind JBR in a place called JLT, Jumeirah Lake Towers. So that's myself and Simon were down there in a hotel during the week having a light refreshment, and we were talking about actually what's going up, and we were seeing buildings. We're going, I don't know what that one is there, and we were researching it, and it was the Hilton, and what we were looking at the one, weren't we, Simon? We couldn't work out what the name was.
The Marriott one.
So there's a lot of development going on, and I think it's more, it depends on what the buyer is looking for, whether it's long term or whether they want it as an investment.
And so would you, I mean, a bit like anywhere, I guess, people should really contact the agent on the ground and just say, this is what I'm looking for. Which area would you suggest we move into? Because from my understanding, yes, you have areas for investors or areas for flats, but you also have beautiful villas in Dubai that I'm guessing some people wouldn't know about, that you actually have also villas and beautiful buildings. It's not just high rise building that you have there.
Absolutely.
And so what do you think is the most common mistakes first-time buyers make in Dubai?
Well, I'm going to answer that one straight away. He's actually choosing an agent that actually is on the ground, knows about Dubai, knows what areas, knows what I'm going to say, instead of going down the route of going to a developer, because there's a lot of obviously social media out there, and people have, I mean, I've heard it this week from somebody where somebody's bought off a developer, an agent that was with a developer, they've purchased it, and once they purchased it, they're not there to help it afterwards. And as you know, with Fine & Country and our reputation, I mean, we win awards all over, and that's why we're bringing it out to the Middle East, obviously over to the UAE and Dubai, especially with myself. It's about actually taking what the actual buyer is looking for. It's not just about the property, it's about the location, where the schools are, where the shopping centres are. How long does it take to get from the development where they're looking at to these places, shopping centres, beaches, airports, because Dubai is a big place and there's a lot of developments. So it's about finding out what the buyer wants or the investor wants, instead of an agent that's working for a developer just trying to push that one development into the buyer. It's really important, that is. It's about finding somebody that knows and takes what that buyer wants.
So there are a lot of estate agents in Dubai, a lot. How do you make sure that you're choosing the right one? Are there things that people should be looking out for when looking for an estate agent?
There's many things that they should look for. I think the most important one, it's actually a reputable agent that was working with a reputable company, because you find that there are 80,000 probably agents in Dubai. There's probably 40,000 of them or less that are actually that have a RERA, which means they're able to operate there. And I think you've got many of the agents that are out there originally were, and I don't like putting it this way, but it is true. 6 months ago, they were a bricklayer in the UK, or they're an electrician, and they've seen the glitz on social media. Let's go to Dubai and earn lots of money selling property. But then you have the other side of it. You've got agents that have been in property. I mean, I'm going to take Simon for an example. Simon's been over there. You've been there, 16 years? And yeah, and I've learned, I've been in the industry a long time. And obviously, as you know, I've been here in the UK, working in the UK for 4 years, nearly 5 years with Fine & Country. And the brand it's recognizable. Yeah. I myself coming out to Dubai, I've learned myself just in the last few months from Simon being there. Yeah, because he knows the market inside out. He knows the areas. He knows the developers. Now, if I was going to buy somewhere, I would be looking at somebody that I know who knows the area, knows the industry, knows what the developers are. Because look, there's some big developers out there, but it doesn't mean that their developments are really, really good. And I'm not going to put anybody down, but it is like that over there. You've got so many developers. So it's the most important thing is finding the right agent. And it's actually using an agent that knows what he's doing, or she knows what she's doing.
Thank you very much for your time, Matt. I'm aware of time, and we could talk for a very long time, but there are other experts and areas of expertise that we need to look at, such as wealth and tax. Which is one of the biggest reasons why people are moving to Dubai. So, Simon, really over to you. And your first question is, what changes to someone's UK tax position once they become a UAE tax resident?
Simply, they stop paying it. It's the simplest thing. So it's the same reason that I moved here 16 years ago. So once you become a resident and you're officially a resident, then obviously there is zero income tax. There's zero capital gains in the UAE. There's lots of benefits of doing that. Now, obviously, that doesn't happen overnight. You have to be very careful about making that move. It has to be a formal move. It's not something you can just dip out of the UK for a year or two and then go back and make a load of money. It doesn't work like that. It needs to be a minimum of 5 years on there. The rules are changing as well, where there's a 10 of 20 rule that's coming in. There's lots of changes happening around inheritance tax and non-dom rules around the UK. If you're planning to move for the long term, so I'm myself now 16 years, I'm now done more than 10 years away from the UK. So technically I now have got no ties to the UK for anything. You don't avoid certain things like any taxable income in the UK. So I have a property portfolio in the UK that I still have to pay tax on in the UK because it's UK cited assets. So anything that's tied to the UK, it's physically in the UK, still needs to be taxed. But there's lots of benefits of why you would move to the UAE, and we're still seeing that as well. We've actually had quite a lot of clients that are looking to make the move now, and they were doing it before the conflict. The conflict paused it, and they're now picking it up again. So it's not that it's off the table; it's just pushed it down the road a little bit. And I guess that's the main thing that we're seeing. And we still got a lot of inquiries. Where we work closely with Finding Country, we get a lot of people going, Finding Country have introduced us to you. They're helping us with the property side. We need someone to help us with the planning and the move side. And then the one thing that we do that's very strong, we have the tax and legal teams internally that can help people with that. We have the work that we do with Lumen for the FX as well. People need to move money. And then we have a huge planning team in the UK that can help clients when they want to exit as well, and also return. So not everybody's leaving forever. They go back eventually sometimes. So we're making sure that we've got the two-way the setup for clients as well.
Fantastic. And how do you become a tax resident? And if you have to explain in like 1 minute.
So it depends on when you leave, basically. So you just have to see whether you qualify what's called for a split year on anything that was generated. So if you left on the 6th of April, bang on the day, then it's very clear and cut. If you left middle of the year, it's a bit more complicated. You're going to pay some tax in the UK. You're going to have zero tax in the UAE. So you need someone that understands that side of it and can give you advice on that. We'd always recommend taking advice on that. That's why we have a chartered tax team ourselves that can give clients those advice. So we'd always say, have a conversation before you leave to make sure the things that you're doing make sense.
So to be clear, the UK tax year is ending on the 5th of April, which is why you're talking about the 6th of April, which would make things very clear. So if someone was considering becoming a UK tax exile resident or a UAE tax resident, what should they be reviewing before that and ahead of the 5th of April date?
They should be looking at all of their ties to the UK. Property, wealth, assets, when they're planning to leave, because I said we need to then work out whether they would qualify for a split year, which means basically what tax they pay in the UK, what tax they would, or benefit they would have in the UAE. They need to take advice on that. It can get quite complicated, particularly when you look at pensions and other assets in the UK, and whether they're selling any assets in the UK before they leave or when they're abroad. because there's different ways that you can take advantage of that and do it. So you need proper advice on that. It's not as simple. You have left the UK. A lot of people believe they can just land in the UAE. That's it. They stop paying tax in the UK. It's not that clear cut. It's quite simple, but you need to have someone that can give you the advice, and we can make sure which bit is subject to tax and which bit isn't.
And everybody's everybody's different, so it's really difficult for you to give
we tailored advice. You can't just go it's a clear cut, because then you also have got things like statutory residency test. If you've left family behind in the UK as well, for example, and you've just left on your own for a job, then the statutory residency test will look at your ties to the UK, and then will automatically reduce how many days you could spend in the UK, which could have a huge impact on money that you think you're earning tax-free in the UAE.
That's so interesting. And so for families that are planning ahead, so a question that came around education, the question was, are there more tax efficient ways to fund children's education costs, including university fees, if the family stays in Dubai long term?
What in regards to being back in the UK for that university funding?
From what I gather, so it goes for
Okay, so I mean, some people think they can kind of avoid paying university costs. If your ties are abroad, you're going to technically be an international student. What I know some clients have done is maybe the wife has gone back to the UK with the kids, and the wife's a non-taxpayer, gone back into a property, taking advantage of that. They have a registered address, and then obviously they could qualify for a catchment for a school or a certain university they want to go to. The problem is then you go back to the statutory residency test for the husband. So if the majority of your ties are in the UK, then it could be as little as 16 days a year that the husband could spend in the UK in a tax year. So you have to be very careful on that of what you're trying to achieve. And does it make sense to save 10, 20 grand a year on education costs in the UK versus 30, 40, 50,000 pounds of income, or even hundreds of thousands of income tax liabilities of doing that? Generally in the UAE, we have got a very high standard of education. You've got pretty much every major UK public school in the UAE now, and actually education in the UAE, because it's paid for everything, is actually a very good high standard as well. So again, you need to look at what your priorities are of doing that, and then is the plan to come back to the UAE, because you then will be subject to obviously time you spent in the UK versus time you spent in the UAE from a tax point of view as well. So again, you need someone to look at it for you. It does get a little bit complicated, particularly where people are split countries.
So is education free the whole way in the UAE then?
No, it's everything from every type of school, from kindergarten all the way through to higher education. It's a paid system in the UAE, but you get a much better quality of education, smaller classes, good quality, and good schools as well.
Good to know. And so what's the biggest mistake that you see people making in terms of wealth planning?
It's not looking at the assets properly. So when you move to the UAE, you move into a Sharia system. Okay, so it's not as clear cut as the UAE. So for example, you need to be very careful on your assets. So if you were to die in the UAE, then your assets, if you had assets in the UAE, would be subject to Sharia law. So you have to look at that as well. We have had instances where a husband was working, died, the family had everything in the UAE, ties to the UAE, and hadn't got a will in place. So by default, Sharia law takes over. And by law of that, everything goes to the oldest living male relative, whether you have a relationship with them or not. That's Sharia law. So again, you need the advice on that. And we have legal teams as well that can help people with that. And it just comes down to good planning. Any type of financial planning, wealth planning, is just to not necessarily mitigate something, but just plan for an event that may or may not happen. And that's the key thing with it as well. So we employ over 400 people, 400 advisors worldwide, and we're regulated in all the jurisdictions we operate. And we're used to clients that are mobile. A lot of our clients are transient. They may have started their life in the Middle East, returned back to the UK, been in the UK, moved to the Middle East, moved to America. Wherever they move, we will follow them. And then we've got the qualified advisors in those regions that will look after them and give them the best advice for their residential location.
It's such a it's so and so I mean, I know that we talked a lot about people moving into the UAE, but as you say, you're also looking at people moving out and moving back to their country of origin, or moving somewhere
We
else.
saw the conflict
If
as
you
well. People ran away when the conflict happened that had been long-term UAE residents, ran back to the UK without thinking about the detriment of that, and could have been caught, and some of them have been caught with a very large tax bill because they've spent now too much time in the UK. We saw it over COVID, where there was a little bit of a kind of flexibility then, surprisingly for the UK government, but there was some flexibility then. But again, you need to look at what those decisions and take advice before you make them, because one decision could make a big difference to kind of what tax and all the wealth you've built up over a number of years.
So what is too much time in the UK?
Well, I mean, as a rule of thumb, you go 90 days, 89 nights, you're normally okay. But then the statutory residency test comes in, and that looks at the ties to the UK, and that looks basically at what your ties are. Do you have family in the UK? Do you have a house in the UK that you can go and use? Do you have golf club memberships? Do you have all these sort of things that tie you to the UK? What that basically does, that reduces your reduces your days by the more ties you have. So as I said, if you have wife and family in the UK with a family house they live in, you're in Dubai making the money, you could be down as low as 16 days a year in the UK. So you have to be very careful of that. But obviously it's across the tax year. So you've got some pre-April, some post-April. So you just have to look at when that is. And obviously this time of year at the moment, 43 degrees the other day when we were out and about, very humid. A lot of people tend to leave this time of year from a break from summer, and the family might go back to UK. So it's not unusual for the wife and the kids to go back to the UK for the whole summer. And again, the husband, if he's the main earner in the UK, needs to be careful about how many days he can go spend in the UK if they've kept the family house alive.
Definitely. Anyone who's speak to someone.
Definitely.
So many people. I think it's safer to talk to the expert, definitely. I mean, again, like with Matt, we could talk about it all day. I find that riveting as well. So thank you so much, Simon. Anyone thinking about moving to Dubai, definitely speak to Simon as quickly as you can, because as you can see, you need to think about things in advance. 5th, 6th of April is the date, really. So talk to Simon. But now let's go to financing a property in Dubai, and seeing if it's something that is as complicated that people may think, or if it's actually quite easy. So let's talk to Chris from NS. So Chris, for you, what financing and mortgage options exist for buying property in Dubai?
So thank you, Emily. Firstly, thank you so much, everyone, for joining today. My name is Chris Lloyd. I'm head of private clients at NS Global, and we act as a brokerage able to have access to the entire lending market, and we're able to source the most competitive mortgage terms for clients looking to purchase around the world, but particularly today we're talking about Dubai. So we've helped a number of clients assist them buying property in Dubai, and we do all the financing around this. So the types of lending that we can get, just to give you a brief overview, it is a lot more attractive if you're actually resident in Dubai. That is from a loan to value perspective. For example, if you're borrowing under 5 million dirhams, then you could be looking at 80% loan to value if you're resident in Dubai, 65% loan to value if you're not resident in Dubai. And then if it's above 5 million AED, then you could be looking at around 70% loan to value if you're Dubai resident, and 65% if you're non-Dubai resident. So again, even if you're not resident in Dubai, we can still obtain very, very good mortgage terms on that basis. And again, with interest rates as well, it is more competitive if you are local. But again, it's not too much of a premium that you're paying if you're not resident in Dubai and you're just looking to maybe buy a holiday home, or if you're spending a bit of time out there. So in a nutshell, that's what we can offer. All lending is done on a capital and interest repayment basis. So you would have comfort that your loan is fully repaid by the end of the mortgage term.
So interesting. So I'm just trying to put some order into how, if someone is looking at making the move to Dubai, in what order really should they do things? Because if they're getting a better loan to value by being a resident, a UAE tax resident, then, and you guys correct me if I'm wrong, I'm just trying to put some order, should they actually move to Dubai, rent somewhere, become a resident, and then look at buying if they want to maximize on their purchase? Is that how that would work?
Yeah, often this is what we're seeing a lot of, and we advise. So I spoke to a client the other day. Again, we were even looking to raise money against a UK property to think about using a deposit, and I think the advice really was move there first, become resident, also be in your employment for so that we've got then the history of, you know, at least 3 months pay slips, and just making sure you've got that track record of earning at a decent level, and then looking to actually invest. Also, again, it's, you know, spoken about, there's so many different areas to invest in, and it's about speaking to the right agents to make sure that you're buying the right place. So I think, yes, it's definitely more advisable to move there. The more often the non-res mortgages that we're doing is where, and again, to give you a bit of an example, I had a client that was introduced to me from a UK private bank. They already had a substantial mortgage against their UK property, and they just wanted to buy a second home in Dubai, just because they spend a lot of time out there. And we were able to then get a non-resident second home mortgage for them. We were able to give comfort that they could support the mortgage payments in the UK and in Dubai, and the running costs of both properties with their income. So that's typically more the non-resident loan that we do.
I'll just add a bit to that as well, actually, just to kind of do that. So yeah, we do get that a lot, and we do say to people, yeah, get your residency done first, because that's kind of tailored to you being here, and that goes with the kind of tax side of things as well, and the wealth planning. It's much easier for us to do that, particularly if we look at someone who wants to move a pension, for example. Once they're a resident of the UAE, it's much easier for us to do certain things on the pension planning side when they may want to move something to the UAE, because there are a lot of advantages of that, where the client may be suitable for them to encash their pension in the UAE because of the zero tax position. So they would need that residency. The only other thing that would make that slightly different is if they were looking to buy an investment property off plan, because there would be no need for a mortgage until later down the line. So anyone can buy a property in the UAE. They do not need to be resident if it's an off plan property, because it's funded by a deposit and then a structured payment plan through that journey. A mortgage typically only comes later down the line, but obviously we wouldn't advise people to jump into the UAE not really knowing where they're going, unless they had an idea or had an agent that was helping them with that, about buying a property. We'd usually recommend rent for a period of time, understand where you want to be, because there's always something new and plenty of options available. And also the market's shifted now as well, where we're now seeing it being very much a buyer's market as a result of the conflict, which is good. So it's actually reset the market. We're actually seeing a huge change of the amount of people who are actually revisiting the UAE, and actually new people that are now going, actually, I'm happy to look at that again, because I can see the prices have dropped or reset. It's not a crash, it's just a reset, which was needed. So we're seeing a new wave of people that are looking to move their whole life and their whole families to the UAE now.
Oh, and can you help with renting a place while someone is looking?
Yeah, Matt can help with that completely. So there is a rental team that Matt has as well, so he can assist with that as well. We are seeing also the short-term market is also quite good an option. So because the rental market is for 1 year here, so maybe someone doesn't want to rent for a year. So the short-term market is very buoyant, and that could be a good option for someone as well. It enables them to try an area as well when they first arrive, and give them some flexibility. The only thing is that wouldn't necessarily help with the residency, because you would need an actual address to do that. So obviously short term you couldn't do that. There are ways around it, and you might want to look at company formation as an example. So a lot of people set up as a consultancy originally, and that will give you the required documents, visas, etc. as well. So there's other ways around it, and again, we can give people advice on the whole relocation side of things as well, what makes sense. I'm talking to a client at the moment who's selling with file in country in the UK, moving everything over in their business, and we've advised them to do that to set a company up initially, because they will then have everything they want to buy as soon as possible. But we got the same situation where the loan to values don't make sense for them to do that as a non-resident. They need to become a resident first. So absolutely, it does make sense to do that.
So, Sandra, just what's needed to pick on what you just said, because I didn't understand, I didn't know that the difference of loan to value was so big for resident and non-resident. So going back to mortgages and for people who want a mortgage, so let's say someone wants to invest instead of becoming a UAE tax resident, how do lenders assess UK-based income or overseas applicants?
Quite similarly to how we would do it in the UK, sort of your last 3 months pay slips. If you've got bonus income, then we can look at sort of like last 2 to 3 years bonus income as well. If you're a self-employed person, again, 2 to 3 years tax returns or company accounts. And then we can look at taking salary and dividends, sometimes in the case of net profits as well, into account to really maximize the affordability. And then it's really just looking at their internal metrics on how they assess affordability, but it's just making sure that the income is enough to support the debt, and then particularly if you're non-resident as well, just making sure that you can support mortgages and running costs of both your property in the UK and in Dubai, just to make sure again that works from an affordability standpoint. But yeah, it's very similar in terms of what documentation would be needed and the way the documents and income levels used as we would assess it in the UK.
So we have that question.
Sorry, Emily, I think you're going to need to go closer to your mic.
Sorry, I'm back. Can you? Sorry, apologies for people seeing my face very close again. Is there then an age limit? Would you say that it is more difficult as you're getting maybe a bit older to get a mortgage, or is it still something that is completely possible?
I think it gets more challenging when you get to the kind of retirement ages on lending. Again, similarly to the UK, it does get, when you get to that sort of 65, 70 age, then because it's hard to then take a view on income. So it's really that kind of pre-retirement age that lenders will take your self-employed and employment income into account for affordability. So yeah, that does become a challenge.
Okay. And what would you say the biggest misconception is from people about financing a Dubai purchase?
I think that clients often think that they get a better rate and more favorable terms if you have a golden visa, which is just not the case. If you're resident in Dubai, then it's typically the same rates for everybody. I think one thing I would point out with getting lending in Dubai, what we can do sometimes, and this is quite attractive for clients, particularly with a market that sometimes if you need to move quickly, we can do what we call a low doc mortgage, where you don't necessarily need to provide such a large amount of documentation to be able to get your mortgage underwritten. And for that, you would pay anywhere up to 1% higher on your interest rate. So it's just getting the lender to take a bit more of a view is quite attractive. But yeah, I think most common misconception is that the golden visa thing with the interest rate.
So I just touch on what the golden visa actually is, because some people want to know what that is.
Simon, I was going to say, can you please give an overview of the golden visa?
In the UAE, we've got every color of visa that you might want. So typically it comes with a residence visa with employment, which is 2 years. You can also get that linked to property. If you purchase a property around 750,000 dirhams or 150,000 pounds, that would come with an investor visa. There are now multiple other visas you can get based on your job, etc., etc. But if we talk about the golden visa, it's a very simple process. It's a 10-year visa that is usually, not always, but usually linked to property. So if you purchase a property of 2 million dirhams or more, £400,000, then you automatically get a golden visa, and that covers you, your family, parents, staff, whatever you might want on that, which gives you that. What it basically does is give you the ability then to not have to do visas every couple of years. It's also not tied to your need to be in the UAE. So normal residency visa, you need to have been, if you're out of the UK for more than 6 months, it will auto cancel. With the golden visa, that's not the case, but it does give you lots of other benefits as well, like repatriation and evacuation from other countries. You might be stuck in the UAE, will basically go and pick you up and bring you back, and all sorts of other, there's a long list of things that you get with it that the UAE is doing. And what they've done is to try and encourage people to spend their life here and make it their home forever. It used to just be when you were working, so that's all changed. And there's different ways you do it, and it's quite easy to get the golden visa. It almost comes by default with a property purchase, and again, that shows that you have a long-term residency within the UAE, so that can help with planning. But again, certain tax requirements remain in place. You can't just be in the UAE for 1 year and claim to be a tax resident. Sorry, 1 year, 1 day, and claim to be a tax resident. There's other things that go along about time spent in the UAE as well.
Thank you, Chris. Thank you so much.
My
Anyone
pleasure.
who needs a mortgage to move to Dubai, please talk to Chris as soon as possible. Again, planning is key in your move to Dubai. So talking about money and currency, let's go to Steve, because some people, as we know, leave currency to the last minute, and that could be a very, very expensive decision. So Steve, the first question for you is, many people simply transfer their money through their high street bank. What's the difference between using a specialist currency provider and using a bank?
Hi everybody. Yeah, let me introduce us a little bit as well. So yeah, we're basically a very property and wealth savvy currency broker. So we're helping people move money around the world for property relocation investments like we're discussing today. We're 25 years old, we're 200 people plus, we're doing millions a day and billions a year. So people listening to this, you are our everyday clients, so we'd be very surprised if we can't help you. But yeah, you're right. One of the first misconceptions is around the fact of, well, why would I use a specialist broker rather than just go to the bank I've known? And two big bits really there. Ultimately, if we couldn't save clients money, we wouldn't be here. So, put frankly, we'd be very surprised if we can't save clients money, enabling them to obviously increase their budgets or indeed protect their budgets to make sure this dream becomes a reality. The other big piece is around risk mitigation. So what I'm kind of alluding to here is, well, historically, being frank, the currency is the last thing on the to-do list that people look at and simply go, I've got to pay now, I'll pay. Who's cheapest now? Whereas really, because of the volatility in this Trump era we're in, the amount of currency movement we're seeing is pretty significant, and it can make a dramatic difference on people's budgets. And that's where one of the big values is. We've received proudly over 1,000 5-star reviews over the last 12 months, and that's really the big theme in the feedback around the fact they get personal points of contact, ringing out and engaging with people around what the world has done and how that impacts their property. Respectively, when was the last time the bank rang anybody? And that's where the big difference is between us and the banks.
And so if someone decides to use Lumon, is there any cost to opening an account or using your services?
No, there's no cost to open up an account and to speak to us. In a similar way of the rest of the team on today's webinar, we're all offering free consultations to discuss this with everybody. So you can have a free conversation with us and a member of the trading team. And really the big thing there from a currency perspective is, here's the rate from the bank or the other, here's our price, which is better than them. But equally, here's the trend. Here are the days and events coming up that might improve the level. Here's the risks, here's the rewards. How do you want to manage that around your availability of capital, your risk appetite? So really trying to provide that consultation so you can make a more of an informed, educated decision as to how you manage that transfer. So for example, that mitigating risk piece, that the pound to dollar exchange rate, and the dollar is pegged to the dirham, has moved by nearly 2.5% in the last 30 days. So it can make a significantly meaningful difference on how big the pool is in Dubai, perhaps.
And listening to Simon, thinking it's 43 degrees, you want a big, big pool.
You have to have
The
a
bigger, the better.
Absolutely.
So when should someone start thinking about the currency transfer, and do they need a UAE bank account first?
Great question. And another misconception that people have, that they again leave it to the end because they think they don't have a destination account. Why would I then start talking currency? But the sooner you're committed, the sooner you've decided this is a when rather than an if, that means your trading window in essence is open. So you can start planning that currency, the strategy around that. So in the same way that we've discussed today around talking to Chris and Simon and Matt early to get that information and form the plan, we very much suggest that we're in that top 2, 3, 4, 5 conversations to make sure you can start considering those options. And we do have people that we've seen the exchange rate move a lot, as I've alluded to, where they've actually bought their currency before they bought the property. So they can know how much it costs and set it in their power spreadsheet that their budget's secured, and they know the property or the development that they've fallen in love with is still a reality, even if Trump or someone else goes off and does something that we didn't expect.
Which is unfortunately possible. And so yeah, it's I think what I love about your service is that I'm really risk averse, and I love the fact that I would know how much I have in my bank account and how much I can afford. Seeing what's everything happening in the world, we were talking about the geopolitical situation at the moment. Are you seeing more volatility in the movement of currency between the pound and the dirham, and how should people plan around this?
The amount of volatility is still incredibly high, and I don't think we're going to be going back to the quieter period. I like some other people in the audience, I've been doing it for nearly 20 years. And when I first started, if the exchange rate moved by 0.5%, it would be big news and on the front of the Financial Times the next day. Whereas now, if we see that 3 days a week, it's a quiet week. So the volatility is here. It's not changing, and it needs to be proactively managed as a result. And that's perhaps another thing to mention when you're looking at purchases and properties in Dubai. There's a number of different kind of properties that you can invest in, whether or not they are new build or pre-existing or the second market. And as a result, all of those have different payment schedules as to how often you need to make the payment over the period of weeks or months or years, theoretically. And we can do all of that. So we can actually, it's quite a popular thing for when people are looking at the new market in Dubai, is you can do forward contracts, which are basically a buy now, pay later option, which allows you to obviously lock in that exchange rate, lock in the budget we've talked about already, but without you having to pay for it straight away. So you can get the money working hard with you through Simon and Wealth before you invest it in the property thereafter, or the spreadsheet is still set and locked. We did one of these not too long ago for one of the penthouses in the new Mercedes development, and it was a 18-month payment plan, and that particular client was a president of a bank and was quite surprised that we could still save the money over his employer, which he was a bit conflicted with. This is great news for me, but I've got more work to do when I go back in tomorrow. But equally, we're able to offer great terms for forward position to lock in those stage payments, so they knew exactly what the budget was going to be, or the money was still working hard. So yeah, a number of tools that we offer around this. Yeah.
And I think, let me pick on that, because it's something that Simon mentioned, and I didn't expand further because we were talking about something else, which is I think, Simon, you were talking about new development and the fact that you might not need a mortgage, it's a deposit, and then so how does that, can you give us an idea of how that works?
Let's say someone has got sizable wealth and they want to purchase a property in Dubai. First of all, we would look at, is that cash, first of all, and if it is, and they want to invest in a property, well, then we would look to get that money invested for them, first of all, because it is typically stage payment. So you'll pay a deposit, somewhere between 10 and 20%, and then a structured payment plan through that term. So then that would be perfect for what Steve's talking about, to go, right, we need to lock the money at this rate over this period of time. In the meantime, we're making that money work for them. So let's say we're growing the money at 8 to 10%. Okay, there is zero interest on those payments as well, because it's fixed from the start that the client has to pay. So we're taking that money that's cash, investing it for the client, and then we draw down on that and use Steve to convert it using the forward contract that's in place. The client's made money on the growth of the money they had in cash. They've saved money on the transfer, and the payments are there when they need them to fund the property purchase.
That's a great system. That's a great solution. So, and you said 10 to 20% deposit. So if someone wanted to look into it, and is there any like price bracket that you can give? Or
We can do. We've got access to stuff, and Matt can assist them with something from 100,000 to 100 million. No problem, whichever one you want, and everything in between. So you can go and purchase anything you like, and they made the market very easy here. It's not that. I think there's a misconception that everything in Dubai is expensive. It's not. You can buy a normal property in Dubai from £100,000, and you can buy that completely off plan. Now, depends whether you want to wait for it to complete and how you fund it, etc. But we do see a lot of people that look at their investments and going, Dubai is a second or third home for me. So actually, it is an investment. And then we would talk about how we get that money working for them in the interim. If there is it could be 3-4 years away before it's completed. Don't leave that money in cash. We'll work it for you in the meantime, and then we'll pull on the different resources afterwards. If you want a mortgage later on, great, then the mortgage can be done later on as well. And you can actually mortgage usually once the property is completed 50% paid. You can then use a mortgage at that point if you want to. And again, if the mortgage rate is, let's say the mortgage rate's 4%, and you're making 8%, well, then you're making 4% on your money. So usually using a mortgage makes sense as well. So again, these are sort of things that through advice, when we sit down with the client and we complete a fact find, we would look at the goals and what they want to do, and we would give them advice on these sort of things, because a lot of clients do hold cash, and now that cash is earmarked for property. But why is it sat in cash for the next 3 years? It doesn't make any sense. You can make 8 to 10% per year on that, even with a mortgage net 4 to 5 in your pocket.
So, to you, Steve, if you had to give one advice on what's the biggest mistake that you see people make in their currency planning?
I'm going to probably be cheeky here and say 2. First off, they'll assume that they'll just wait till the end, that they can't talk about it early, and they'll also make the assumption that they have to wait until they've got a bank account before they can have the conversation. So in essence, it's those 2 parts. And then there will be some clients that will do some research and all of a sudden have a friend that suggested the exchange rate's going to move in their favor, so they'll wait, even though there's no economic or political argument as to why they think that might be the case. So there's always an element of people wanting to gamble a bit, but then I'll often find they're the people that have emailed me at 2 a.m. overnight and want to have a conversation when they've done the maths and realise the risk that they're rolling.
Thank you very much. I've got quite a couple of questions because we've got still a little bit of time, which is great. So going back to investment and people investing in Dubai rather than buying and settling down there. Any idea on rental yields in Dubai?
The market's moved now, and you can expect sort of 6 to 8% on the yield. If you went a holiday home market, you might squeeze that 10 to 12, depending on it, but that has changed a little bit recently. So again, we would look at with a client, what is your goal with that money? Is the goal for a property to be an income tool? If that's the case, and again, it's about location for that. And sometimes that makes sense to put that onto a holiday let if they literally is pure for investment. And there's good companies out here that can run the whole property for them. And you can get higher yields on that as well. Obviously, it comes a little bit of hassle, but then you outsource that with a good company that can run the whole thing for you. So that can be better. Obviously, that's been hit recently, so we are lacking in tourists at the moment. Not residents, but lacking in tourists. So again, it would be what makes sense for you now, and it may be long-term rental is more sensible, even though the yields be slightly less. But if you compare that, we do have a lot of clients that come across from London that barely make 3%, you're making 6 to 8, you're still winning. So it's still a good market for that. And we would say, again, let's diversify that, put some into property, some into different assets that we use, and fixed income products that we have access to, where we can also get the client around about 6% per annum with zero hassle and zero risk. So there's other tools that we can use for them as well. We'd be trying to understand what the purpose of the investment was. We lost you there. We lost you there a little bit, Emily.
So, I think you kind of answered that question. But I think it's something that not surprised me, because you're moving to another country, and you're moving to another country that has different rules and regulation, which is about inheritance tax. That you need to consider in the UAE. Would you then strongly advise someone to have a will if they're moving?
Yeah, absolutely, because I mean the rules changing when you leave the UK now and move to a residency based model. So technically myself, without any assets in the UK, I can avoid or not pay inheritance tax now, because I've been out of the UK for more than 10 years. So but when you do buy things, whether that's a normal property for end use or an off-plan property which people don't visit, that situation again, a will is absolutely imperative, because if you bought an off-plan property as pure investment, I'm not going to use it, I'm not going to live it, and you die, well, the developer will take it back, or it will default to your oldest living male relative under Sharia law. So again, you need to make sure that you protect your assets as you would, and a UK will is not good enough for that. You can't just tack it on and go, yeah, follow my UK wishes. No, you need a will in every country you've got assets.
Oh wow. Okay. So look, even if I have a will here, but I have a property in Dubai, I will need a will in Dubai to protect.
Will, but the UAE will not follow that. You would need a UAE registered will that respects your wishes in the UAE for the assets in the UAE.
Okay. Right. Learning every day. And so we've got a few minutes left. So let's go a bit lighter and not talk about will or taxes or wealth, and let's talk about living in Dubai. Maybe what would be your main attraction and reason for living in Dubai? If we start with you, Simon, because you're living there. So what is the attraction?
16 years here. I'm not going back to the UK. Never going to happen. It's easy to live here. It's very simple to get stuff done. Once you're kind of resident, it's very, very flexible. Location wise, we can pretty much travel everywhere. So actually tonight I'm jumping on a plane and flying to Mexico, our Mexico City office tonight. Not the easiest thing to get to from UAE, but the rest of the world is pretty accessible. So 70% of the world's population is a direct 7-hour direct flight to the UAE. So connectivity wise, perfect. And obviously you get all the tax benefits as well.
And
absolutely,
because there was that question actually about the cost of living. How does that compare to the UK?
Now you can go wild and you can brunch every weekend. We've all done it in our first kind of stint here, but you can also live normally. I would actually say if you're doing, let's say, a normal life, where you're doing your weekly shop and you're doing all that and you're spending majority of your time eating at home and such like, it's cheaper than the UK. It's cheaper than lots of places. Yeah, obviously you don't have tax involved, so that's fine. Petrol, I don't even know how much it is. I know it costs 20 quid to fill the car up. I don't actually know what the price per litre is. But so there's those sort of things as well. Obviously, education costs can be a little bit high. So you need to factor that in. And again, we would run a budget plan for a client as well, look at kind of what the income was, where they wanted to spend it, making sure they're allocating their wants, their needs and their desires as part of their income, as part of the wealth planning that we would do for a client. But yeah, I mean, you can live cheaper than certain places in the world without a problem. Definitely cheaper than the UK.
Yeah.
Thank you. Matt, one reason to move to Dubai? You just came back.
Lifestyle. I think wake up in the morning, sunshine. I mean, I've just got off a plane to the UK and we're just not equipped for the warm weather here. As I walked into my garden and it's completely brown. I just like the lifestyle. It's lovely. It just makes you safe. It's clean, and it's actually, and I believe it's cheaper to live there than it is here in the UK. And the other one, I'm going to say it, there's no tax.
There's no tax. Because I know that Steve and Chris are not in Dubai, the question would be slightly different. What would be your advice to someone thinking about moving to Dubai? Let's start with Steve.
I would go with the fact that Google doesn't count as advice. So many people come to us and suggest, oh, I've done all this research and they've just been onto Google or AI now. And that's normally based upon information of 6-9+ years ago, perhaps. So yeah, I would suggest have the conversation, start, form the team around you to make sure you've got the right people advising you in the right way to make this as easy and as stress-free as possible, and to avoid the pitfalls that all of us here today know all too often that people make.
Thank you. Chris?
Like I say to all my clients, there's never a time that's too soon to start speaking about finance and putting that plan in place. And it goes back to what I was saying, especially if you're moving to Dubai, we can at least show you, even if it's right that you go there, rent for a time first and then buy, at least I can then show you what those mortgage terms will potentially look like, obviously subject to rate movements when you do come to buy. So you can start budgeting, put that plan in place, and then see what it's going to look like. So I think always get your plan sorted. We can have as many conversations up front as well, start tailoring what that mortgage is going to look like around your needs. And yeah, just don't make any impulse purchases.
Yeah, safe advice. I do make a few, but they're cheap, so that's fine. So before we close today's session, just a quick recap. Don't let the headlines or Google, for that matter, alone drive your decisions, and talk to the experts who are on the ground and know exactly what is happening. Review your tax position early. Talk to Simon as early as possible and give him as much details as you can so that you prevent an expensive mistake somewhere with your taxes. Sort out your finance with Chris, and talk to currency with Steve as well, and make sure that you're doing that well ahead. Steve said that the currency at the moment is quite volatile, so just make sure that you're talking about it as quickly as possible with him. And obviously build a team of specialists around you. You've got great people here who will take your call and give you the advice that you need if you're thinking about buying, relocating, or investing in Dubai. So thank you so much to you all for sharing your expertise today. We will share a recording of today's session for those who would like to replay the whole session or missed it and would like to see it. And there will also be the contact details of all the panelists here, should you wish to contact them. So thank you again, everyone. A pleasure to see you.
Thanks, Emily.
And
Thank you.
see you soon.
Take care.
Thank you. Bye.